Okay everyone, welcome back to my channel. So in this video we're going to be going over a requested video on supply and demand, using supply and demand with order flow footprint charts to identify a true area of supply and demand. So here we have NQ on the 1 minute chart, right? So I never start my analysis on the 1 minute chart. That is a dumb thing to do, right? But for those who are asking how supply and demand zones work, I just want to kind of jump into the video and explain to you a couple of things, right? So when you're choosing a supply and demand zone, right, choosing the right zone is often the battle that most traders have. And we're going to be going over how to do that in this video. But the truth is, when you're choosing a zone to trade from, right, people call it fair value gaps, people call it order blocks, people call it breakers. There's a lot of things that people use, and there's a lot of things that people use, terminology wise. But what you're looking for essentially is you're looking for a reaction into a zone. You're looking for a reaction into a zone. You want to see if the reaction holds or if the reaction fails. So in this case, we saw a supply zone that failed. So I call this a flip zone, right? So it's a flip from supply to demand, right? It is a supply to demand flip zone. So how do you know the market is going to flip, right? So that's going to be the essence of this video. And that is the essence of my channel as a whole. So for those who are interested in order flow, I do have currently a mentorship. I've got a few mentorship spots here at Price Action Lab. So if you are interested, just drop a comment below in the comment section. I'll be more than happy to get back to you if you're interested in free one-to-one sessions or learning order flow in general. Now, with that being said, how do you determine an accurate supply and demand zone, right? So what you're looking for is you're looking for how price action behaves inside of this level, i.e. you are looking for the interaction between buyers and sellers over here. So simply put, when you see a demand area, right? So let's just break this down off the charts for 1 second because I want traders to really understand this. When you see price coming into, let's call this a demand area to begin with, right? So this is our area of demand. I'm just going to label this demand. If this is an area of demand or a point of interest, right, how do you know price is going to go up, right? The only way you can know price is going to go up is by reading the order flow. And so the order flow, I use the ATAS platform, ATAS, Advanced Trading Analytical Software. The only way you can know who's in control at this supply area is to read what's going on inside of the candles, right? Diving inside of the candles gives you an indication as to what's going on inside of the candles. Because remember, candles are a picturesque version of the orders between the buyers and the sellers. So coming into a key level and hitting buy or sell based off a hammer, an EMA crossover, or a breaker structure isn't simply viable. You need to understand what is going on inside of every single candle. And here we introduce two concepts, the delta and the volume. So let's just go back to our order flow. Let's just go back to TradingView for a second. So on TradingView, the way we want to be analyzing price is we want to understand that every demand zone is holding due to passive buyers. So we come into the demand zone, right? So we first enter the demand zone. And the way I want traders to think about this is I want you to think about what we call a triple X model. So the triple X model is something that I've designed and it's super simple, right? So the triple X model, as you can probably tell by the name, has 3 key components. You want to know where to trade from, you want to know what to look for, and you want to know why you are looking for it, right? So these are the 3 things that contribute to the triple X model. And so the triple X model is important because you need to always have these 3 things ticked before you take a trade, right? So often the best trading is simple trading, and simple trading comes from having less steps, not more steps. So once you know where to trade from, i.e. you have this demand zone, you know what you're looking for. So buyers and sellers, you want to know what's going on over here. In this video, we're going to be focusing on the 3rd and final step of the triple X model. And so the triple X model is basically the why. And so simply put, if I were to sum up the why in 2 words, it is basically using order flow. And so order flow is the only real way that you can tell whether a fair value gap, a demand zone, a breaker, or an I fair value gap is actually going to hold, right? And so order flow comes down to basically using footprint charts, right? Footprint charts are the fundamental backbone towards my trading, and it's the fundamental backbone towards supply and demand. So with that being said, if we just apply the triple X model to what we can see here and add a demand area, we want to understand what is going on inside of the demand area. So the only reason a demand area holds is because there are passive buyers present, right? So in this region, there are passive buyers present. In this region, there are passive buyers present. So when we see price breaking higher and giving us any kind of retest, right? any break and retest strategy, which is kind of what trading is in a nutshell, right? Almost every strategy can be broken down into a simple break and retest. Now, I don't want to trivialize every single strategy down to break and retest, but a lot of strategies do derive from simple break and retest. Now, if it's so simple, why do traders come up with psychological errors, right? FOMO, fear, hesitation, revenge trading, over trading, over risking, over leveraging. These things simply come down to not knowing who is in control and therefore not knowing if you're at a supply and demand zone. It's easy to see a supply and demand zone, but can you react in the moment based off true information, right? And that is what the why and the footprint chart is essentially for, right? So a demand zone holds because there are passive buyers at this level. And so how do you know that there's passive buyers at this level, right? So let's just go back to the candlestick charts for a second, right? So when you saw price rallying off this particular supply flip to demand area, what you needed to understand is that in this region there were passive buyers propping up. And so the question now is, how do you know passive buyers are propping up, right? So what gives us the indication to buy here? Because we need confidence in our buy trade, right? So confidence is the best way to eradicate psychological errors. If you have psychological flaws or errors, the best way to reduce them is to increase your confidence. So psychological errors are inversely proportional to confidence. So here you need the confidence. And how do you know? How can you be confident in a buy position? Well, you need to know that buyers are in control of the market. And so how do you know buyers are in control? So do you see how everything is mechanically broken through, right? I need more confidence, therefore I need to know that price is more likely to go up. How do I know price is more likely to go up? Because I need to see passive buyers in control. I need to see buyers in control. How do I know buyers are in control? Because there's passive buyers at this level. So confidence, let's just write this down, right? So confidence is a function of knowing higher prices are likely, right? Higher prices likely. And so how do you know that there's higher prices likely? The term we use to describe this is passive buyers, right? Passive buyers need to be in control at this area. So the way we determine that is by seeing aggressive sellers fail. And this is where we're going to be kind of diving into the footprint charts, right? So what does a demand zone actually mean? So here on the same exact data on the 15-minute time frame, I want traders to understand truthfully what was going on in this level. And I want traders to understand this first initial tap over here. So when you see price tapping into a zone, right? So this is now a supply zone because price has yet to break it at this area. Now I want traders to understand the only reason a demand zone holds is because we see buyers in control, right? Passive buyers are in control of the market. And so what we can see over here is we can see a large amount of aggressive buyers tapping into the zone, right? We can see a large amount of aggressive buyers tapping into the zone. Now, if we just kind of break this down back to the candlestick chart, that area corresponds to this area. So we see a lot of those aggressive buyers that have failed to break the level. This means that the demand zone is a strong level, right? That means the demand level is a strong level because we're seeing essentially buyers failing, which means that sellers are in control. So I'm just going to write S over here. Sellers are in control, right? So that's exactly what the ATAS platform or the order flow footprint charts tell us. Now, if we just take a look further, what we can see is we can see the same price action over here. The same kind of thing happens again, where we can see aggressive buyers entering the zone, aggressive buyers entering the zone. How do I know these buyers are aggressive? And so what's really going on is that we can see something called the delta. So if we just take a look at the numbers, right, we all know, I've made several videos on this on the YouTube channel, we know that there's a left number and a right number. Here we can see blue delta in the sense that we see blue rectangles, right? We can see more aggressive buyers and aggressive sellers. We can see buyers that are present and they're trying to drive price higher. But what we can see again, we can see a large rejection again, huge red candle to the downside. And so we see those rejections over here. So this is the same price action you see over here on the 1 minute chart. So we can see sellers are in control, sellers are in control. So right now, for those who are interested in trading this, we can see that sellers are in control. The supply zone is essentially being respected. Now that the supply zone is being respected, we want to understand how and where price is likely to move higher. So I want traders to understand what was going on, right? Quick diagram. Again, illustrating what's happened. So we've come into this zone. I'm going to just make it a smaller diagram. What we can see is we can see the market rejecting. So buyers have failed here. and buyers have also failed here. So we can see essentially supply is in control, supply is in control. And I want to stress again, the reason I know that is because aggressive buyers have failed. Now from here, we see price breaking above the level, right? We can see a huge break to the upside. So you want to sit and ask yourself, now that we see price breaking above the zone, what does that tell you about the passive sellers here and the passive sellers over here? What does that tell you? Well, when we see price irking above the zone, so we can essentially, if I break this down, we can see price breaking above the zone, right? So we can see price not wicking above, but we can see price breaking above. And we saw that over here in this region, right? So when you see this price action, after you've seen a couple of rejections over here, this essentially means that the supply area is beginning to fail, all right? And we can see that from almost a common sense perspective. Sellers were in control here and they succeeded, right? Sellers were in control here and they succeeded. But now this happens. So we know that these sellers have been wiped out, right? They've been wiped out because the passive sellers were unable to keep price below the zone. So this is starting to show you a flip or a switch from supply to demand, right? But that's not the final confirmation. Now, when we go back here to the regular candlestick chart, what we can see is we can see price breaking before heading to the upside. So what we want to understand is we want to understand what is going on over here, right? This is kind of the final rejection, right? So we want to know what's going on over here. Now, when we go to the 8as or the order flow footprint charts, what we can see over here, very interesting, before we see the markets really rallying higher, I want traders to focus on what you see here and what you see over here. This here is very interesting. So within every green candle, you can have sellers or aggressive sellers, right? This is kind of a new concept, a novel concept I want traders to understand, right? You can have a green candle with sellers, right? That sounds counterintuitive, but let me explain. And think about what that means. Now, we have a green candle over here, and we actually had a lot of sellers within this region of the zone, right? So again, this is the zone, and what we see is we see aggressive sellers over here. And I want you to pay attention to this particular red delta. Again, red delta, negative delta, means there's more aggressive sellers than buyers, right? 115 for 17, right? That's roughly almost 100 more. 100 more aggressive sellers than aggressive buyers, right? These aggressive sellers failed to break below the zone, right? Because we can see now the passive sellers have failed, and now these aggressive sellers are also failing. So what does that tell you from an order flow perspective, right? So from an order flow perspective, that basically shows you, I want traders to look at this wick, right? Look at this wick. I want traders to focus on red delta, red delta, red delta. We see a lot of negative delta within this area, right? We also see 3 0 prints, right? 4 for 0, 2 for 0, 2 for 0. We see 3 0 prints. And so when you see 0 prints, it means the auction has been wiped out. It means there's no aggressive buyers and sellers both trading at that level. In fact, we saw a huge amount of selling volume, right? We saw a huge amount of aggressive sellers that failed to drive price lower. There was an absorption of sellers. It is the absorption of sellers and the failure of sellers that creates a demand area. And that is the main kind of purpose the market, that's the main reason, sorry, the market moved higher. So what we saw over here, if we just kind of bring it back to our diagram over here, what we basically saw was this. We saw sellers failing and these sellers failing, right? We also saw price coming in, and over here, those aggressive sellers that were here also failed. So if sellers have failed here, sellers have failed here, right? These are what we call passive sellers, right? These were aggressive sellers, right? Even they failed, right? Because the market broke higher. This shows you price is at an active demand zone. The supply zone has failed, right? And that is the reason the market moved higher. So if you are looking to take any kind of trade, you basically want to be understanding what is going on between supply and demand, right? So you want to understand what's going on. So when you see price breaking with the body above, you can comfortably have your stop loss just beneath here, and you can target a 1 to 2 or a 1 to 3 depending on your overall risk to reward. So if we just continue to play price on, we can see the market eventually kind of rallying in our direction. And so if you like these videos, give it a like, give it a thumbs up. And if you want me to make more videos about supply and demand, how to implement this strategy into your own particular edge, just comment below any questions you have. And I look forward to seeing all of you in the next one.